Hi, this is Roger Conrad. I'm co-editor of MLP Profits with Elliott Gue. What I want to talk about today is some of the price action we've seen in our recommendations as well as across the MLP universe. It's been somewhat disturbing to some of our readers, judging from some of the feedback you've given us. We've tried to stay out in front of it by giving you numbers and so forth and results and real hard news on the companies as it occurs. But what we're seeing, in fact, with a lot of this trading is more soft. For one thing, some of it's related to the price of oil moving up and down. A lot of companies, or a lot of investors rather, take a look at these companies and just infer that they're oil price sensitive, which is absolutely not the case for a company, say like Enterprise Products Partners, which derives virtually all its business from fee-generating assets, and in fact increased its dividend in 2008 despite the price of oil falling from $150 to $30. Pretty clear evidence that oil prices aren't that important to them, but that has not changed the fact that their stock price has been knocked around by it. So what are we to do with this? Obviously we've seen a lot of these companies that have run up in price pretty substantially give some of that back. Energy Transfer Partners being a pretty good example, coming down from the mid-50s now into the mid-40s. Obviously somewhat alarming, and particularly for those who bought it near the upward limits of the price target. Well, we listened to a lot of people over the past months talking about how a number of our picks were trading above the buy targets and how that was made it very difficult to buy them. Now, of course, the opposite response is, well, these things have dropped, so shouldn't we be getting rid of them? In actual fact, you really just want to remain disciplined here. The most important thing with these companies right now is that they are able to raise capital cheaply and they're able to deploy that into new cash-generating projects that raise distributions pretty much like clockwork. That's been in effect the last couple of years. It remains in effect today, stronger than ever. Interest rates have jostled around a little bit here, but borrowing rates for MLPs have remained very, very low. At the same time, remains a tremendous shortage of projects or of infrastructure to connect the shale gas and oil reserves of the U.S. With the refineries and major pipelines and markets that are needed for it to be sold, and to get into the system. So that's a tremendous business opportunity. It's still there. Again, that's the most important thing with these things. As long as that's the case, we're going to see dividend growth. And over time, if you look at the prices of these things, compare them to the dividend rate, there's a pretty good correlation there. They follow the rate of dividend higher over time. A lot of things happen in the near term, push things up and down. That's where you time your buys and your buys primarily. At this point, again, we're seeing a much higher ratio of buys, companies trading below their buy targets in our portfolios. If you've been waiting for an opportunity to get into some of these things, now's a great time to do it. Again, it may not feel right to some. Fear levels as they grow and as a company comes off, it makes people doubt what they see in front of their face. But again, the bottom line case for these companies remains strong. We've updated all of them, their first quarter earnings, the last couple of issues of MLP Profits. It's all there on the site. You can read about it. The underlying bullish case is still there for their growth of dividends, for their growth of share prices over the long pull. And that's really the bottom line. And prices have come down. So good time to buy. Take a look at those tables. Buy conservative holdings if your only concern is income. Go down to the growth and aggressive if you can take a little bit more risk for potential upside in price. But I think there's a tremendous number of bargains in the universe now, and this is the time to be looking at them. Thanks for tuning in. Look forward to chatting with you next time.